to the Web3 Prof Podcast.
Good morning and good afternoon, everyone. I'm here with Eric Yakes, who is managing partner at Epoch VC. Eric, thanks so much for being with me here today.
Yeah, thanks for having me on, Joe. It's good to meet.
Eric, let's get started with just getting some context as to your story in Bitcoin. How did you get started, and how did this all come about for you?
Yeah, so I was interested in finance and economics pretty early on, and I studied that in college. Economics has always been a passion of mine. I spent time, reading into a lot of other areas when I was in college that were kind of outside of the curriculum, and I was lucky enough to have been introduced to alternative perspectives other than just like the general Keynesian ideologies that were, put into the collegiate curriculum. And that always kind of gave me just like a bit of a nihilistic sense as to how the current structure of the world worked and how our monetary system worked. And I just always assumed that this is the way it is. And the first time I discovered Bitcoin, I just like wrote it off as kind of a speculative thing. I wasn't much of a technologist. I thought about everything in financial terms, and blockchain technology is how it was described to me. And I'm just like, oh, it could be an interesting technology, but in terms of like investing in an asset around it, I don't know how you measure that value. Most value in finance is measured by having some sort of production of future economic benefit. And it wasn't until Bitcoin was ultimately described to me as like an alternative to central banking that I got incredibly interested in it, because I was so aware of those problems. And I always wondered, like, is there a solution here? Or is it just a system that's like, between a hard place and a rock, and it can perpetually sustain that? And so when I got into, all of that, I spent a lot of time learning more about Bitcoin, and then I expanded to broader cryptocurrency. It took me a while to kind of learn enough to rule out why I wanted to focus on Bitcoin. And because I believe it's the only asset that is capable of actually solving these problems. And, I was working at a private equity fund at the time, and, it was something where I got to a point in my career where I was just like, okay, I spent all my time thinking about Bitcoin. I think it's solving the most important problem in the world. Why am I not working in this? And I decided to make a jump into the industry. And the first thing I did was spend, about 9 months just researching very in depth, everything I could learn about Bitcoin and how I'd like fundamentally describe my thesis for how it's going to change the world.
When was this?
So this was in 2020. So that was during the pandemic. And I started in the research. I just started writing because I thought it was the best way to understand it was to write it out. And then I ended up writing so much that I was like, oh, well, I guess I could probably just turn this into a book. Anybody can write a book. And I didn't really know that. I wasn't ever really planning on being an author, but I started researching into it. I was like, yeah, you can self-publish through Amazon, all these different things, pretty easy. And yeah, so then I did, and it's definitely a testament to how the incentives of the Bitcoin like social layer ultimately align around it, that the book ended up becoming wildly more successful than I ever would have guessed, and it started getting a lot of support online, and that gave me enough of a platform into the industry to do what I'm doing now, which is I have a venture capital fund that invests in a lot of the infrastructure around Bitcoin that I think is necessary to ultimately bring it to that initial vision of making central banking obsolete and creating the first neutral monetary system in the world. And I think that there's a long way to go in order to get there. But I view providing capital allocation to that side of the industry as one of the most valuable things we can be doing right now.
Probably when this episode airs, we'll have more clarity on what Donald Trump's going to do as far as holding Bitcoin on, I guess, the balance sheet of your country. What are your thoughts on even kind of the proposals or the ideas that have been thrown around as to what people are hoping he might do?
Yeah, it's fundamentally, I think it's politically motivated, right? Like, I don't really buy that Donald Trump believes in this big grand vision that a lot of people involved in Bitcoin have of an alternative money for the world. I think that politicians are catering to it because there's a very significant voting class that they've realized. And, the cryptocurrency super PAC that put a lot of these politicians into office during this election cycle, it's arguably one of the most successful in history. And that's signaling to everybody else in the industry that it's good to support this. These people can really help you, get the things that you want. So I think that that's the fundamental incentive driving a lot of the support. It doesn't mean that there aren't people who believe in it. I believe that RFK Jr. had a very strong fundamental understanding of Bitcoin's value proposition. And as much as I don't trust politicians, I think he kind of sold me a little bit on the authenticity of his beliefs. And so with Trump, I don't think we're quite there, but I do think that there's going to be adoption. I think that based on my expectations, I think he's going to minimize it to as much as he can to like fulfill his promises to the voting class. But the idea that we're going to build some sort of like massive reserve that's going to be a strategic asset for the U.S. in proportion to the rest of our like sovereign wealth, I don't think that's coming for some time. I still think that bottom up type economies, a lot of these emerging market economies, there's going to be a bottom up growth in that very drastically. I think that developing economies adopting it is just, it really, really greases the wheels of other countries that want to adopt it. And I think that's going to be one of the most significant things that we see is that a lot of smaller emerging market economies start adopting it as a reserve asset. And I wouldn't be surprised if within the next 5 to 10 years that we see some sort of consortium of trade and settlement amongst a lot of these, global South type economies that are all adopting it in some way, shape, or form. And, the US is going to own some, they're going to cater their voting class, they're going to create better regulatory environment for institutions that are operating within it. And that's all great. I don't think I see quite as much of a competitive race happening as some other people might be signaling is coming.
Eric, you've written quite a bit about Bitcoin from an economic standpoint, as you referenced. What fundamental economic principles about Bitcoin are really important from your perspective to make it sound money?
Yeah. So this was, the most fundamental thing in my book. The first chapter, I kind of kick off with helping people understand this paradigm shift, the paradigm shift that I had to go through so that I stopped saying, oh, Bitcoin is a speculative asset. It doesn't really have any sort of measurable fundamental value, to here's how you fundamentally think about the value of Bitcoin. And knowing that there's fundamental properties that make it valuable shows us that it's addressing the largest market size in the world, which is money. And it's doing that in a way that we can't really stop anymore. It's like a virus that's spread through the internet. And once you come to that conclusion, all of these other criticisms of it start to seem much smaller. And that's what got me really excited about the industry. So like from a principle standpoint, the primary distinction that I try to draw is that the way, one, you have to unlearn how you think about a lot of things. So the way that money exists in our current system is kind of a blip in history. This is a very unnatural way that money has existed. And historically, when we've had comparable systems to this, they don't last very long. So a fiat monetary system, a monetary system where the value of the money is put into an economy by decree and is, quote unquote, backed by the government, but it actually doesn't have any sort of reserve that does have fundamental value to it, that the currency is redeemable for. That type of a system of unbacked money is, it's existed for around 50 years at this point. And that's a very small time frame in the grand history of monetary history. Most sustainable systems have to have some sort of reserve backing by a form of commodity. Now, why did they have to be backed by a form of commodity? Those commodities typically had a fundamental value. And in early primitive monies that, while it followed similar characteristics, these often were monies that were they actually had a value for consumption as well, and not just from a monetary perspective. And that's one of the key distinctions that you have to flesh out, is that people just used money that was natural to their environment in like primitive societies, right? There's all these, seashells, flints, furs, beads, bones, all these different things that were just part of different cultures. And they were drawn to these things, one, because everybody was already using them for some sort of consumption. And they had fundamental properties that actually made them facilitate trade. very well. And there's kind of like 6 accepted monetary properties that are, defined, that make something a good form of money. That, it needs to be scarce, it needs to be durable, it needs to be widely accepted, it needs to be very portable to move across distance, it needs to be very divisible to move into different pieces and group it back together. And it needs to be very fungible, where each unit of it is similar to the other and they're not all distinct and different. And those properties make it something that, if you take all the goods and services in the world and you were to like try to attempt to rank them in terms of those properties, there are some goods that are vastly better than that at that than others. So people always naturally converged in private markets on money that had superior monetary properties in this regard relative to everything else that existed at that time. When the precious metal era came, is when we had people started to really converge on precious metals, because they were so much more scarce and they're so much more durable than any other type of money that existed. As good as gold, something that we know is just like, the supply is not going to get inflated. It's very, very scarce. And those systems of money evolved into coinage, and those were systems that, were prevalent for centuries and millennia. And it wasn't until we had the printing press and double entry bookkeeping accounting, and then ultimately the telegraph, that allowed a system of paper money to function very efficiently. And paper was actually very good from a monetary perspective of fulfilling those properties. With all these technologies, it was highly portable, it was highly divisible, it was pretty durable, and it was very easy to make it fungible. And with all these technological developments associated, it was very hard for gold to really keep up with these systems once we had like the telegraph. So paper money was good for all of these things. It just wasn't scarce. So we needed to tie it to something that was, and that's why gold standards existed. As long as we only create paper receipts that are, tied to the supply increase of gold that exists in any given year, then the amount of paper outstanding in the monetary supply is going to remain scarce. And then it's not going to inflate very rapidly. And then people aren't going to lose their wealth through inflation over time. And that is ultimately why we needed that property associated with paper. And then fiat economies take that and they remove that scarcity property. And we have rampant inflation. We have expansion of debt through that process. And the story of history is that, there's peak and trough, expansion and credit, and then ultimately crashes in societies that start to abuse the value of their money through a fiat type system. And so you need to understand that there's a difference between monetary value and consumption value. And what's unique about Bitcoin is that it was kind of the first monetary asset that didn't have any sort of consumption value. Like precious metals were kind of close to that, where the vast majority of their value to society was from being used as money. But not all of it. Even today, gold is used in electronics. That's a consumer-based value that it has. But still, for the majority of it, people own it because it's scarce and they know the supply is not going to increase, and that's good from a monetary perspective. Bitcoin is purely monetary. Everything it does is associated with monetary functions. You can't eat it, you can't live in it, you can't do anything else. So it's actually very isolated from any consumption value. And a lot of people will criticize it for not having consumption value, but I think that makes it a much better monetary asset. If you read into some monetary theory, some of the problems in monetary systems emerged when there was actually a shock to the money that occurred not because of its monetary value, but due to its consumption value having some sort of economic shock, and that would impact the monetary side of the system.
What type of monies historically had some consumption value? Do you have some examples?
Yeah. So there would be things like, so you could use, like in Native American tribes in the US, they use like bones and seashells, things that could be crafted into jewelry, things that could be crafted into tools, like certain types of like weapons, like arrowheads and flints and things like that were used. A flint is a good example, is used to start fires. Everybody had a lot of flint all the time. It was relatively scarce. So people are kind of like, okay, we could also trade this as money. Everybody always wants flint. So it's widely accepted. But yeah,
another interesting one is like in prisons, like cigarettes are used as a currency, but also obviously people consume them as well, eh?
Yeah, and like that's kind of how often like people would end up choosing it, because it was widely accepted. Once everybody's using something already, and they always know that they're going to want some of it, it becomes very easy to start trading in it.
That's good. So many people argue that the 21 million fixed supply of Bitcoin is a really important feature. From your perspective, how does this scarcity contribute to Bitcoin's long-term value compared to fiat currencies, or even compared to other crypto or digital assets?
So 21 million, I think, is paramount. It's really the first time that we have created a fixed supply money that isn't responsive to changes in demand for it. We know that its supply will only ever get to this threshold, which is interesting. It's the only asset in the world that has supply that doesn't respond to demand. That's just like a very novel thing about it. Its whole value proposition is underpinned by that concept of, that being an immutable aspect of Bitcoin. I guess, I could spend a lot of time going into the different sides of debate around like monetary theory and is it good to have a fixed supply of currency or something that could effectively be deflationary within the economy? Or does currency need to be, quote unquote, more elastic and expand with the growth in the economy? And then what does that ultimately mean when it's doing that? That starts to get very complex because it's not just, so before we even had commodity money, this is a good place to start. Before we even had commodity money in primitive societies, the oldest form of money was debt. It was trading favors today for favors in the future. And that's ultimately, that's always existed as another form of money in the economy. So a good way to think about like the, entirety of monetary supply is what enables people to trade with one another. And if we lived in a world that was purely based on Bitcoin, would people still be using debt? Very much so. And how much would that debt expand? How much would people be trading based on trust versus settling in Bitcoin directly every single time? And depending on how much that proportion exists, also something that impacts the money supply. It impacts how much trade is ultimately occurring through it. So that's like the simplest way that I think I could probably describe it. But the 21 million cap's important for Bitcoin so that we're always subject to like a very hard line number. And we know that's never going to change. And people always have the option to be participating in that. I expect that markets are going to respond if if the economists are correct. And we need to have an elastic money that's growing at the same rate of supply within an economy, then I think the market will naturally guide itself towards that. And people will trade receipts on Bitcoin that are effectively a credit expansion within the economy. And that will, de facto increase the monetary supply from that.
Do you think that there is a way in which Bitcoin, maybe let me back up. Bitcoin is widely accepted within libertarian and Austrian communities, but those communities are small.
Yep.
Is there a way where Bitcoin is attractive to people who maybe unknowingly follow Keynesian economics, or maybe who are more socialist or liberal in their viewpoint? Because this is an easy sell for those of us who believe in the free market. But what about those who don't? What's the feature of this kind of new money system for those who appreciate some of the features that our current system has?
Yeah, I mean, I think it depends on the nature of, of the individual who's liberal. Like if we're talking about somebody who is just simply an advocate for the state, then that's pretty different. Bitcoin is going to reduce the power of the state, and of course within our communities, and I think within just broader, more conservative focused communities, that's considered to generally be a good thing. It'd be much better if wars didn't happen as much, and but nonetheless, I think that there are liberal-minded people who, really want to be focused on social aspects more so than individualism, and they truly want to benefit the worst off in society, and they want to solve wealth inequality, and they have a lot of social ends that they're searching for and prioritizing in their the way that they interact within the political economy. And I think for those people who are genuinely interested in that Bitcoin is going to be one of the greatest enablers of those virtues, whether or not they know it yet today, because I think that a lot within those groups have have for very long been either told or believe themselves that the state is the necessary solution to solve these problems. And I think that, people who are against capitalism and they want to occupy Wall Street and all of these issues, it's funny how much overlap there actually is within the Bitcoin community and people of that type of an ideology. I just think that I think that they understand a lot of the problems. I just don't think that they understand the solutions. And I don't think that, giving power from one powerful group and giving it to another, aka the state, is ever going to be a solution to those things. I think that increasing wealth within a society is what solves most problems. And I think that Bitcoin's going to vastly increase the amount of wealth in society. And if you understand that, all these people that think capitalism is a problem, capitalism enabled the US to grow from like effectively a startup economy to the largest economy in the world in a matter of a handful of centuries. That's incredibly valuable. The protection of property rights is what underpins everything. And that's a good thing. That's what capitalism is. But from a monetary perspective, when we have a board of 7 people making decisions about what should happen with the price of everything, interest rates on our money supply, it's the cog at the center of the wheel. Every decision they make has downstream effects on everything else in the economy. The amount of wealth concentration and wealth inequality that's emerged from this type of a system, one, it's anything but capitalist. It's very socialist. And all of these problems really stem from monetary control. And this is really the first tool that we've had that can kind of like enable these types of freedom. And I think it's highly aligned with a lot of the liberal goals in modern society. I just think that they've been given a scapegoat and they still believe in that scapegoat. And once they understand that it isn't really the scapegoat, it's actually the people that have been pointing you at the scapegoat, and it's been them themselves the whole time using it as distraction. And the reality is that technology is probably going to end up solving a lot of these problems for us. And we're kind of in an inflection point in society where you can actually say that, which is great. That's one of the unique things about our times is that, whether you're a libertarian or an anarchist or any of these other more obscure ideologies, usually they create these utopian visions of the world. And a lot of that's dependent upon, well, once technology gets to this point, then we'll be able to do it. And I think we're actually starting to kind of get close to that inflection point where some of these more ideological views on how society should be run can become more realistic in short form.
I think for the message or the marketing of Bitcoin, I think kind of the libertarian message is difficult for some people, a lot of people to stomach. And kind of what you laid out here is like, well, I mean, you kind of made a bit of a flippant comment, and I feel like I'd like to hear you talk about it more. Like, well, you kind of passed over this idea that with libertarian ideologies, there'd be less war. And I mean, the left is often fighting against this idea of war, and they're looking for social causes, and they want the marginalized to be supported, and they want the environment to be sustained. And in my view, more and more of that is answered by Bitcoin, but I'm not sure that we as Bitcoiners are really spreading that message as clearly as we should. And sometimes we focus on maybe the more capitalistic aspects of Bitcoin. Like, how does Bitcoin stop or limit war, or how does it help people come out of poverty?
Yeah, it's interesting. So I think wars are started by the state. If we assumed a scenario where the state's role was globally simultaneously reduced across all economies, say 80%, then you can bet that there's going to be a lot less resources that they're able to consume to be able to actually fight wars between one another. All these power dynamics that are played between the East and the West over security, political games that are kind of justified as a necessity for the security of us domestically. These things are, it's not that I don't even disagree with a lot of it. It's true that we do want security. It's true that I think, the US is somewhat of like the healthiest horse in the glue factory in a lot of different things. And like having them in a more dominant role does actually provide security to the world in some ways. What we want is to reduce all of that simultaneously so that no country or no individual has to worry about one power falling and the other becoming more belligerent during that period. And that's what I think is very compelling about Bitcoin, is that by reducing simultaneously the value of currencies across the entire world in relation to a neutral system, That's really the only way that you can kind of like reduce the role of the state in a simultaneous manner. And that's really, really interesting to me. And I think that so the most simplistic idea, there's truth to it. I think it's a bit oversimplified, but there is truth to it, is that if societies participate in a neutral monetary system where people are conducting trade in a form of money that can't have its supply expanded, or at least has very significant limits on how much the supply could be expanded without it deteriorating, um, then that changes how much people can finance war. If the US and if Russia and if all these other countries had to get a majority vote every single time they wanted to go to war, then there would be a lot less war, but they don't. And they can finance it through debt by the ability to issue fiat money. So limiting their ability to be able to do that is a very significant thing. If you look at the history of central banking, if you look at when most central banks emerge, they emerge right before a very large war. And then what happens after the war is that the currency gets inflated very significantly. It's the only way to finance war. You're not going to get your citizens to vote for it. Nobody wants to have their son go die. And I think that that's going to be one of the fundamental shifts. If we can remove the ability for a government to endlessly, arbitrarily inflate the amount of debt on their own behalf to go finance things that nobody wants.
That's great. I think that's so important for us to make sure we have a clear understanding of how, Bitcoin can really help society in ways like that.
Yeah.
So do you see Bitcoin evolving as a global financial system to take over the global financial system, replacing central bank? I know that's idealistic, or maybe that's ideal. Or do you think it'll function alongside traditional financial systems we currently have?
I think it's going to take a very long time. I mean, a lot of what we're doing at our firm is we're kind of planning for that, and we're trying to allocate capital to businesses that can help it get towards that long-term goal.
Can you give some examples there? Like what kind of business?
Yeah. Right now, today, it's just it's a lot more just like brick and mortar financial services businesses. Like right now, we're just trying to expand Bitcoin adoption, get as many people using it, as many people saving in it as they can. Our belief is that Bitcoin's not going to be used for the monetary function of like medium of exchange for a very long time. I think Bitcoin is going to have to be one of the most prevalent forms of store of value for people within society before people actually start exchanging in it directly peer to peer with one another. Going back to that point, we were talking about like Flint, for example. Once it becomes something that basically everybody has, that's when it's going to get a lot easier for people to trade and start denominating their trade amongst one another in it. But for now, it's the scarcest asset in the world. And everybody's getting turned on to the idea of, well, we should save in this. And then once, 70-80% of the world is saving a little bit of money in Bitcoin, at least of the world of people who are capable of saving, then that's going to change how much people are actually starting to conduct trade. So when we look at it, it's just like businesses that are software businesses that are just providing basic consumer institutional financial services, businesses that are more like kind of deeper types of software that allow Bitcoin to be used in more ways that otherwise wouldn't enable it. A lot of that discussion gets pretty technical. But our view is like a lot of those goals are kind of what the broader cryptocurrency ecosystem is attempting to do as well. We think that there's quite a bit of froth, and there's a lot of fraud, there's a lot of scams, there's a lot of things going on that side of the industry, but nonetheless, some valuable ideas have emerged out of it. We just think that they put the cart before the horse, and that the only way that you can really achieve long-term value doing this is to use something that has monetary value. And monetary value is a standard. It's not really something that everybody gets to do. People have to converge upon one specific standard over time. We think Bitcoin is far and away the best standard. So the question is some of these other functions that like cryptocurrency protocols have created, things like decentralized exchanges, decentralized lending, all these, peer-to-peer structures, they're really interesting. but those should be created on Bitcoin, and they only need to use Bitcoin as a token. They only use money as a token. I think the only reason you really want to issue another token for something is, one, if you're issuing a security, or two, if you want to create seigniorage. You want to convince people it's money for a period of time, and then you can capture wealth through the inflation of its supply. But everybody's just going to want to trade that for Bitcoin because Bitcoin has better monetary value. And that game works. That game can work for some period of time. It's not a game that we want to play. And it's something that I don't really view as sustainable within this in the long term. But if all this gets built and we have things that make Bitcoin much faster for payments, things that make Bitcoin very easy for people to access and automate and integrate into the current things that people are using every day, then that's great. Imagine if, there was a one-stop shop that's totally integrated for banking software, and you can run all your tax and your accounting, and there's a collateralized stablecoin on top of Bitcoin, so you don't ever need to use the fiat system, and you can just purely use this bank account, and everybody's accepting this and moving it between one another. It's going to be vastly more efficient. And we're trying to build a lot of those things so that people can get to that. But it's going to take a long time, and our goal is to invest in what's needed today versus tomorrow.
I guess one challenge as well is that, like, every time you pay with Bitcoin in most places, or maybe every place, as a medium of exchange, that it triggers a taxable event. Mm-hmm. And that's hard to deal with, right? Like, it's really hard to track that for the regular consumer. It's frustrating because you got to pay tax on your coffee or chocolate bar, just from the transactions perspective. Yep. And it doesn't seem, I don't know, doesn't seem to be a lot of conversation in governments that I hear about that are really interested to change that policy. And I would imagine, I don't know, what are your thoughts? How important is that change for adoption?
It's the biggest thing. Whether a government declares Bitcoin legal tender, or they want to do a strategic reserve, or any of these other things that they want to do, all of that pales in comparison from the idea of legally treated as money and remove capital gains tax from transactions in it. I think that would be the number one most important thing that could happen for Bitcoin from a sovereign standpoint.
Interesting. So obviously decentralization is a big part of Bitcoin. Do you see any major threats to decentralization from a security perspective? Is Bitcoin in a good place, or are there things that can negatively affect the security of Bitcoin?
Yeah, this is a really complicated question. The short answer is no, I'm not concerned. But I think the concerns of Bitcoin security that people have in the mainstream are very misguided. And I think that if you are more involved in the technical community, there are things to be concerned about. There are things to be like, okay, we need to keep an eye on this. But nothing that's insurmountable to its security in the near term. And the fundamental arguments always boil down to, how are the incentives aligned to where either this trend will stop or this trend won't continue to, grow to such a massive scale. And I mean, some of the biggest concerns are within how the mining ecosystem around Bitcoin works, and centralized points of manipulation that, like, a bad actor who has a conflict of interest with the success of the Bitcoin network could intervene within the mining ecosystem and potentially influence it. I don't think we're at a point to where that would undermine the security of Bitcoin fundamentally, but it's something where we have seen some centralization in things like mining pools and hash rate control, and it's been growing. And that's something to watch and be concerned about. But my general belief is that the incentives are aligned for a competitive environment within these markets. And there's going to be points in times where some people have more or less power than others. And there's going to be points in times where they lose quite a bit. Anybody who tries to scale too much on the mining side of things usually has to take on quite a bit of risk. And there's a lot of bankruptcy that happens. There's a lot of new competitors that come in. And I think we're just starting in the industry with all of that. There's going to be a long road ahead for all of it. I think, like, general retail folks are concerned about, like, quantum computing risk to security. And, the funniest thing is that this concern is brought up with Bitcoin is a concern. It's just like, this isn't really an attack on Bitcoin. It's an attack on cryptography. And in all these cryptographic systems are being used everywhere. And it's funny how much like traditional media isn't writing articles on, if quantum resistant computers can crack cryptography, then your bank account is not safe. And nobody talks about that, but that's definitely the most salient criticism that you should be talking about with quantum computing. The reality is that it's kind of similar to arguments. It's similar to a lot of other like political arguments where it's a doomsday argument that was going to happen 20 years ago, and they've been saying that for 30 years, and that's kind of how it is with quantum computing now. And even if it were to occur in the near term, there's solutions where Bitcoin can soft fork the network into a quantum resistant cryptography. So it's not really a legitimate concern. But if you do want to get really deep into how the mining value chain works and how that has some centralization in it, then that's something to get really smart on if you're concerned about the consensus of the network.
That's great. Thank you. Kind of to wrap things up here, if you're speaking to someone who's new to Bitcoin or someone who's skeptical about Bitcoin and someone who's skeptical about the long-term viability of Bitcoin, what is your strongest argument to prove a case or to make an argument that Bitcoin is here to stay? Sure.
So I never try to explain to people how it works or, how I started off this podcast for why it's valuable. And it's more recent. I think when Bitcoin first started, the arguments we had to make were much more prospective. Here's why it will become a big thing. What you can tell people today is that it's the largest computing network in the world, barring the internet itself. It's the most secure, decentralized network in the world. There's millions of computers all acting simultaneously, securing this thing every day. Its adoption is growing faster than the internet. It's growing faster than mobile phones. It, from an investment standpoint, is the best performing asset in measurable history. On a risk-adjusted basis, it's outperforming every asset class that exists. And this is something that just can't be stopped anymore. It's $2 trillion. It's more valuable than silver. It's more valuable than Saudi Aramco. And any criticism to think it's not legitimate at this point means that you're just, being intellectually dishonest with yourself, because all the data is on our side at this point.
Great. I think those are some great key points. Eric, how can we learn more about you and the work that you do in the space as well as at Epoch?
Yeah, just follow me on Twitter. It's my name, Eric Yakes. That's my handle. I have links to a lot of things there.
That's awesome. Eric, I really appreciate your time being with us today. I think this is such a great and helpful conversation about Bitcoin. Thank you.
Likewise, Jared. Thanks, man.